Good afternoon, ladies and gentlemen. For those in Europe, good morning for those that are calling in from the US. And thanks very much for joining us for our Airbnb conference call, part of the pre-IPO series that we've got going on here at Bernstein. I'm Richard Clark. I'm the senior analyst covering global hotels. We've also got Mark Schmerlich on the call, who is our US internet analyst. And he'll be asking the main set of questions today. And our guest speaker today is Sarah DuPre from AirDNA. I'll let Sarah explain what AirDNA do, but they're really one of the preeminent sort of analytical firms looking at Airbnb and the wider private rental market. So they've got a lot of fantastic data and insight that we're really looking forward to tapping into today, given the fact that we're expecting hopefully some of the Airbnb documents potentially come out next week. I do appreciate everyone joining today. I think when we set this date up, we thought we'd be well clear of election news. It's still going on, but hopefully we can get through the next 35, 40, 45 minutes without missing anything too important. If you want to include any questions, you would have seen a Pigeonhole link in the email invite you would have got, so please use that. If you can't find that, then please go ahead and either email Mark or myself, or use IB any way you like. We'll definitely try and include your questions. With that, I will hand over to Sarah to kick off the slide presentation part, and then we'll jump into the Q&A afterwards. So Sarah, welcome, thanks, and please go ahead.
Perfect. Well, thanks so much to Richard and Mark for thinking of me. So why am I here? Airbnb IPO. They've been talking about it for years, always chickening out, and it seems like they're actually going to file next week. So let's see what that means. So I'm from AirDNA. At AirDNA, we collect data on short-term rental listings, particularly those listed on Airbnb and Verbo, which is about 10 million listings globally. How we collect this information, I'll pop this over so you guys can actually see. How we collect this information is, first of all, we're scraping the supply data from Airbnb and Verbo. So we get all the property characteristics and the calendar availability. And then on the back of that, we have a machine learning algorithm that helps us determine reservation information. Also part of that algorithm are our relationships with PMS and channel managers. So these are people that are using softwares to handle multiple listings. So we receive daily reservation information from these partners, as well as from about 35,000 individual hosts that helps us increase the veracity of that algorithm and make any necessary changes for differences in booking behavior over time. Okay, so just a quick agenda of what we're going to talk about. We've got short-term rentals versus hotels, short-term rentals, performance in 2020, supply trends, investment trends, and future outlook. So let's talk about short-term rentals versus hotels. The important thing to note here is that throughout the COVID pandemic, previously hotels were always sort of winning out. But throughout the COVID pandemic, it's certainly driven down the necessity and the desire for hotels, mostly due to some of the common areas and concerns about health and safety. So you'll see that short-term rental listings have far outperformed hotels since the COVID crisis. And also of note is the fact that larger short-term rental listings, so those with 2 or more bedrooms, are also outperforming what we consider hotel comparable. So this rentals HC. That would be studio and 1-bedroom short-term rental listings that normally are more comparable with hotel rooms. So what about short-term rental performance? So we'll dive into Europe first of all. Basically in Europe, everything was down. You've got drops in supply, both in terms of the overall listings and the number of available listing nights. But curiously, you have an increase in ADR. This is most likely due to the decrease in availability and therefore driving prices up slightly, though you see the difference isn't that significant. In the US, it's a bit of a different story. So while you see a decrease in the number of listings and available listing nights, you see an increase in occupancy, ADR, and RevPAR. This is most likely due to a shift in listings, which we'll look at in a moment, as well as some of the important changes in where these listings are located. So here's our index of looking at destinations versus city markets. Previously, particularly for Airbnb, their sort of bread and butter were these city markets. And post-COVID, these markets dropped drastically as everybody was fleeing the cities, nobody wanted to be there. And looking at this further, we noticed that in destination markets, such as Breckenridge in Colorado, we've seen an increase in average revenue per property by 38% year over year, if we compare July of 2019 with July of 2020. Whereas in major city markets such as Boston and New York City, we've seen a decrease in average revenue per property of 46 and 39% respectively. So it's quite significant, the differences there between destination and city markets and how they're behaving. In Europe, it's much the same story. Overall, of course, the curve is down, as we see for short-term rentals. However, that split between destination and city is still occurring. So destinations are recovering much more quickly. If we jump into trends in supply. So here's some Airbnb supply trends. Obviously, we noticed sort of a peak in January and dropping off in COVID, most likely due to the decrease in interest in being in cities, which we spoke about earlier. But one of the interesting things about Airbnb is that supply is extremely elastic. It's very easy to list a property on Airbnb. Anyone can go on and do that. I'll give you guys a quick anecdote of something that happened to me by sort of a new host. I went to Cannes with some colleagues for the MIPIM conference about 2 years ago. We rented an Airbnb. It was a beautiful 4-bedroom house. We got there, settled in, everything was great. We awoke about 2 in the morning with a crazy French guy banging on the door and windows, shouting at us in French that that was his house and that we needed to give him the keys. And so one of my colleagues, luckily quite a buff guy, ran downstairs, fully dressed, 2 knives in hand, ready for battle. Ended up, I rang the owner. It was all for naught. He mentioned to us, "Oh dear, yes, this is Albin. He is a friend of my wife's from high school. He's a bit down on his luck. He lives in our garage. And sometimes he goes out, gets a bit drunk and forgets his keys, and I have to let him in. And I forgot to tell him that you guys were coming." So this is one of the things that we'll talk about further in some of the questions later on with Mark as well, about what that supply really means and how easy it is to publish a listing on Airbnb. In terms of Verbo, this is much more of a sort of professional segment, as they tend to be in more traditional destination markets. So what that means is that before COVID, you had sort of normal supply and the complete opposite of what happened in Airbnb. You see a huge increase in Verbo supply during and straight after the pandemic, which has held pretty steady throughout the summer months. And here you see that in terms of what that means for new listings to the platform. Let's look at investment trends. So people looking to invest in a short-term rental. We've run an analysis at AirDNA of some of the top locations in the US for investing in a short-term rental. And here what we've done is we've taken the average home value from Zillow, along with the annual revenue potential. Sorry about that. Annual revenue potential of the average property in that area, looked at a 4-year appreciation, and have come up with a cap rate for that property. Yeah? So also of note is the fact that these high cap rate markets are strongly correlated with an increase in home appreciation. So we notice that in markets where there's higher cap rates, the appreciation of homes, it's higher than in lower cap rate markets for short-term rentals. So certainly something to watch. And then in terms of market outlook, so what's happening over the next 6 months and what does the future look like? So here we've got some booking pace. This was run in September to give us an understanding of what's happening, particularly for the holiday season. So we've got these 2 spikes here this is for the US market, 2 spikes for Thanksgiving and Christmas. And what we notice is that overall, of course, bookings are down. In particular, those for Thanksgiving are 22% down as compared with the previous year. And for Christmas holidays, it's 54% down. This is most likely due to a number of factors. One, people are traveling less, of course, but also the reservations are being made much more closely to the date of stay. So this is something that we're going to keep keep an eye on and see how that impacts the overall trends. But this is sort of our outlook for what's going to happen over the next 6 months. And with that, this is me. Feel free to get in touch if you have any questions after the talks, and if nothing else, I'll pass it over to Mark for some questions.
Thank you very much, Sarah. Really appreciate that overview. Very informal and very helpful. I think on this call we've got a mix of investors, folks coming from the travel accommodation sector and folks from internet. I think what would be helpful if you can walk us through the competitive landscape. You certainly mentioned VRBO, but how do we think about Airbnb and who the other kind of players are in this space, and perhaps some of the differences in how to think about the different companies and how they compete?
Yeah, absolutely. So, I mean, when we think of who the competition really is, we think of three main competitors. We think of Airbnb, we think of Verbo, and then, of course, Booking.com. So a lot of this comes down between Airbnb and Verbo, particularly. It comes down to where the listings are. So as we mentioned, Airbnb traditionally has been quite a city-focused market, and so it's been a bit more heavily hit with the current pandemic in terms of number of listings and overall revenue. Whereas Verbo has traditionally been sort of a destination market, with Booking.com being a combination of sort of both of those. Particularly as it relates to Booking.com, it's sort of difficult to get an overall understanding of what those numbers really look like. So, I mean, with Airbnb, in terms of supply, we're looking about 6.5 million listings, 7 million depending on the time of year, and with Verbo, you're looking at anywhere from 1.7 to 2.3 million listings. Booking.com claims to have 6 million alternative accommodation listings, though it's quite unclear what that really means. I mean, these can be anything from sort of a multi-bed room in a hostel to a traditional sort of country cottage that we would think of as a holiday rental.
Very helpful. And then, across that, one of the first questions that seems to be the most voted up in the pigeonhole is really around Airbnb and exclusive listings. Do you have any sense, as you kind of look across the three players, what is the exclusivity percent? And if so, where does that break up, whether it's geographically or by type of listing?
Yeah, absolutely. So, I mean, in terms of the exclusivity, certainly we see a huge dominance again in the cities for Airbnb. Many of those properties really only list on Airbnb. They don't even bother with Verbo. In Europe, city listings on Booking.com also are of importance, though the overlap between those two is quite immense. So there's very few sort of unique listings that are only listed on Booking or Airbnb. The difference is much larger when you look at Airbnb as opposed to Verbo. So, earlier we mentioned on Verbo, we're looking at anywhere from 1.7 to 2.3 million listings, depending on the time of year, of which about 1 million of those are unique to Verbo. So you're looking at about half, give or take, the supply of Verbo that is unique to that platform. With Airbnb, it's a little bit more difficult to tell because there's not really a great way of sort of matching that up with Booking.com, which would be sort of its main competitor. But certainly when compared with Verbo, Airbnb in the cities has, in many cases, 95% of the market that's only listed on Airbnb.
Very interesting. And so that's probably a good time to understand perhaps why that is on some of those differences on exclusivity. And, I know you mentioned it in the initial presentation, but it'd be great to kind of hear your thoughts on, the relative differences of, if you have a product that you want to put up there as a host, what are some of those differences in kind of getting your inventory listed across the different platforms?
Yeah, absolutely. So, I mean, particularly with Airbnb, it's really easy. That's why their supply is so elastic. That's why it is a little bit heavier in city markets. I think that's also why some of the regulators have sort of been after them much more harshly than some of these other platforms. I mean, I can log on to Airbnb today and publish a listing. That can be my second home. It can be a bedroom in my house. And, there's not much else really to that process. I create my listing to attract users. Whereas with Verbo, it's a little bit more of a sort of vetting process that goes along, certainly with Booking.com, where you have to be more of a professional manager or at least have some sort of a business license. So certainly that plays in a factor. And then also geographically. So if you're a host and you want to know which of these platforms you should list on, I mean, that's one of the analyses that we do quite often at AirDNA is, for each city or municipality or region, which is the dominating player? So is it a market where it's 50-50 and I really need to be on both Airbnb and Verbo? Or is it a market where, as we mentioned in many of the cities, where it's 90-95% Airbnb, hardly anybody's going on Verbo to book a property in New York City, for example. So, what's the point? Whereas if you're in, the Florida Panhandle and you're not on Verbo, you're just not doing well. You're negating sort of where the market is looking for properties. So it's very much destination specific. And it's also depends on sort of what the requirements are to get a property listed.
Understood. And then one thing you didn't mention is kind of the costs and the take rate of these different platforms and how that could potentially play out in terms of where to decide to list. Any color you can share on effectively how they charge the host and what some of those differences might be?
Sure. So actually, as we speak today, there are really no differences. Previously, Airbnb was really famous for having this model where they charged a host fee of about 3% and then a guest fee that was anywhere from 3 to 20%, depending on the total value of the reservation. But they definitely have switched over to the way that their competitors are doing it, whether that's in advance of the IPO or not, unclear. But they've recently switched to a flat commission rate of 15% for owners. So now there's no guest fees at all. It's only for the owners based on a percentage of the reservation. So this sort of brings them in line with all the other players in the market. And it kind of also means that they've, in a way, inadvertently sided a bit more with travelers, as we also saw with the debacle post-COVID with all the cancellations. And there's even a sort of a proposed class action lawsuit that was announced today against Airbnb because, hosts feel that the refunds that were given to travelers and the hosts were basically told, we can't do anything about this as Airbnb. We have to give the money back for cancellations that are COVID related. There's been a lot of things about that in the press. And so I think this is sort of their way of siding with the guest indefinitely and really focusing on that guest experience and getting closer to sort of the professional OTAs, as we like to think of them, such as Verbo or Booking.com.
Sarah, can I just jump in here? It's Richard. I just was listening to the Expedia results call yesterday, and they got asked the question about Verbo having a lower kind of absolute take rate than Airbnb, and the response they gave was, we think it gives us a little bit of a competitive advantage, being a bit cheaper than Airbnb. And do you see any price comparison between the two of them from a owner or a guest standpoint? But they also suggested there could be opportunities if they're smart to take those take rates up. And is there any thoughts you have on ability maybe across the board or just for Verbo catching up with Airbnb on the kind of level of take rates?
I think that's absolutely possible, particularly with this switch. I mean, Airbnb has been slowly implementing this change over the past several months. At first it was, hey, we're going to switch your account only to host fees for this flat commission, but you can change it in your settings. And now they've come out and said, no changes at all. It's a flat 15%. So if you're an owner and you were previously being charged a flat fee of 3%, and now you're being charged 15%, unless Airbnb maintains that really significant market share, particularly as it relates to guests looking for a place to make their reservation. Some of that take rate is definitely up for play by other players like Verbo, who may have lower commission rates. So I certainly see that as a possibility if they play it right and play their cards right. I think the challenge that Verbo is going to have is really twofold. The first of that is, with the rebranding in the US, Verbo is a well-known brand. If you mention Verbo in Europe or in other places in the world, it's not as well known. So they still have a bit of catching up to do in terms of brand awareness. So that's certainly something to watch. The other thing is that Verbo, even in the US, is very much known as a place where you put your property if you have a house in the eastern coast of the US. So you've got a property in Myrtle Beach or the Florida Panhandle, you're going to list that. If you have a property in, New York City, you wouldn't even think of these types of portals. So it very much is going to have to do some work, not only on brand awareness, but on brand image, and making itself be a portal that is well known in city markets as opposed to just these traditional destination markets.
Right. And as a quick follow to that, and I just got off the Uber call last night, and there were certainly many questions around, how to think about take rate expansion in a competitive market. Certainly when we get to a point where, perhaps there's few differences, they all kind of hit this point of parity. Is there anything that you've seen, and we've certainly heard a lot from Airbnb about kind of experiences, for example, but is there anything that you've seen that any of these platforms have done, in Airbnb in particular, to kind of find incremental ways to drive up that take rate through some of these kind of new ideas?
Yeah, absolutely. So this is a really interesting one. In the case of Airbnb particularly, they were really going at it hard in 2019 and even beginning of 2020 still, with experiences, with Luxe, with Plus, with Pro, with all these kinds of different sort of add-ons, and really making their way towards being a full-on hospitality company rather than just an OTA. What we saw during the COVID pandemic is that they certainly decided to scale back and go back to basics, refocus that attention only on the traditional platform. So, as sort of a proof of this, when Airbnb fired about 25% of their workforce, they set up a job portal for these people, which is quite nice of them, to help them find new jobs. But ironically, what you notice is that many of the job titles of these, of those that were laid off, were part of the experiences or the Luxe or the Plus or the hotels team. So some of these tangential business offshoots. So that kind of left us thinking, are they going the hospitality route, or are they sticking with the OTA route? And I was really leaning more towards the OTA until, sort of this announcement of Airbnb deciding to partner with Johnny Ive and his design firm, and then further comments from Brian Chusky, really making a notice that he's hired Johnny Ive to help them craft services and experiences. So it sort of turns that all on its head, and also tells us that I think Airbnb is still very much on the path to be that full-on hospitality company with the IPO just around the corner. And it seems that they're really betting hard on sort of an overall design and brand overhaul to make that happen.
Great. And then one of the things that you kind of mentioned in your presentation, just really around kind of some of the supply dynamics, would love any incremental color that you had, or how you're seeing it in terms of, homes that are either supply coming onto the platform away from what was previously long-term leases, or vice versa, moving off of Airbnb towards longer-term leases, or just, taking it off market. But any thoughts there on what you're seeing on some of those dynamics?
Yeah, for sure. I mean, I think that, within the first month or two of the pandemic, there was a bit of a panic and, many owners were saying, okay, I'm taking this off, or I'm putting it long term. I think Airbnb really has done a great job of capturing that and sort of capturing that trend. In fact, if you go now on Airbnb, depending on where you're looking and what your search history is, I've got some anecdotal evidence of this from a colleague who, as soon as he logs onto his Airbnb, he's recently been looking for places to remotely work. It pops up with longer stays, or, mid to long-term stays. Hey, how about monthly rates? So they very much are doing some really smart marketing to kind of push these longer stays, monthly stays, 3-6 month stays, and taking advantage not only of the work from home sort of model, but of the changes in the dynamic of what makes up a holiday. Previously, the average length of stay for Airbnb was anywhere from 2 to 3 days, whereas throughout the pandemic, that's definitely increased to 7 to 15 days. And so people are taking longer stays, and Airbnb's done a great job of capturing that, I think, in an effort to keep these properties from moving on to sort of long-term traditional rentals. But if they're able to really capture that, still remains to be seen, I think, but they're certainly going after it.
And, one of the things you mentioned there is that certainly kind of that shift, away from cities towards destinations. And this certainly feels in line with that, particularly in some of those destination areas. But, if we fast forward to 2021, assuming that there's a vaccine, and perhaps some return back to kind of the big, metro markets and cities, is there any risk that some of the city supply, might have gone off and switched over and won't be there if and when, consumer demand and behavior switches back more towards the city?
I think it really depends, and I think it's doubtful that that supply is just going to completely disappear. I think ultimately, if you own a property, particularly if you have it as an investment property, you want the highest return for that. So if you're going to get 2-3 times, as we saw in some cases, the returns for a short-term rental property that you would for a traditional long-term rental, as soon as that lease is up, you're going to find the way to put it back on the market. So I do think that will stabilize out. I don't see that as being a sort of a long-term problem. There may be a few hiccups in the interim during that transition, but I certainly don't see it being, something long-standing.
Got it. And then, in these destinations, anecdotally, what we've heard is in some of these places, we're seeing some of these new niche platforms kind of come to market, whether it's like, Aspen and a specific kind of Aspen-specific kind of home, like very, very kind of these micro-regional platforms. Is that something that we're seeing kind of pop up more in a potential threat or change to, where we'll see supply aggregated at some of these destination-type levels?
Yeah, so this is particularly interesting as a complement as well to Google Vacation Rentals. So Google famously has launched this their new search of my phone's asking me how can it help now that I've said Google. They famously launched this this new service where it'll find you a vacation rental. So they've essentially become sort of a Trivago or a search provider. Almost an OTA themselves in this aspect. So I think if these providers can really increase their presence and their brand awareness, then I think it will work. I do still think they're up against really steep competition against people who, I, for example, don't go onto Google when I look for a vacation rental. I go straight to Airbnb or straight to Verbo, depending on where the property is located. So I think that's the biggest thing that they're going to have to compete with. Airbnb has chosen not to participate in Google's vacation rental results search, which is quite noteworthy. So that definitely will give hopefully more visibility to some of these smaller players. But I think the true success of that will still remain to be seen. And it really boils down to how much Airbnb can keep a hold of that brand awareness and Verbo respectively in the markets where it's quite strong.
And I think that's a great kind of setup to the next question. And while I know it's like not something explicit that you track, but if we kind of switch gears to the users and how they discover, properties, any thoughts or color in terms of, what share is going direct? And certainly, you mentioned a bit about Airbnb not going on with Google Vacations, but they are still participating in just kind of, keyword searches. But any thoughts in terms of, how much of that's going direct to each of these platforms versus going through some of these aggregators?
Yeah, I think it very much depends on the demographics. So, with sort of older travelers, it's much more typical that they'll go online, look for the destination as a whole, type in vacation rentals in whichever location in Google and kind of paddle around through there. There's even those who don't use these online platforms at all. My parents still order their holiday rental out of catalog. I know it sounds crazy, but they do it. My auntie reserves the same house in Myrtle Beach, South Carolina, every single year, and they stay there the third week in July, and they have an agreement with the owner. So some of these more traditional areas, I think that's it's not going to be as important, but certainly millennials, Gen Z, they're much more likely to go directly to Airbnb. In fact, it's really become sort of a verb itself of saying, oh yeah, I'm getting an Airbnb, or we're Airbnb-ing it. And so I think there's still a lot to compete with for some of these local providers, and it's very much going to be determined by demographics. And sort of that brand awareness amongst different age groups.
Very helpful. And then as we just think about the market share story, and this is just one of the questions that's coming in through Pigeonhole. The market share story between Airbnb, Verbo, and Booking that you mentioned. Any thoughts on how that's going to evolve, by region? So, like, will North America look very different than Europe, for example? And what are some of the drivers that you see that will, lead to some of those market share, gains or losses?
Yeah, I mean, as I said, I think it really all comes down to that brand awareness. I think on the part of Verbo, particularly outside of the US, they still have a lot of work to do to get to that level of recognition that they have in the US. I mean, very few people over here in Europe have really heard of Verbo, maybe outside of the UK. It's very rare. Whereas as opposed to Airbnb, which is a little bit more global, and then Booking has sort of the opposite effect of Verbo. I mean, Booking.com, you say that in Europe and everybody goes to Booking.com and it's really common. But in the US, they still have a lot of work to do in terms of market share gain. So it really does come down to that brand awareness. It comes down to how effective they can be in sort of spreading that and expanding their territory in these different markets where they're not already sort of the market leader or the first thought of portal.
And then, I think one of your first charts had, RevPAR going up, if I remember correctly. Are we seeing like a shift to higher quality inventory across the platforms? Is it just a supply and demand dynamic where prices are just going up, or any color into really what's driving that?
Yeah, absolutely. So again, it really depends on the destination. I mean, sort of at the height of the pandemic, and even now, there was a time when New York City listings, the price per night was something like $50, which is ridiculous. I think historically it's been an average daily rate of about $350 a night. Whereas the Hamptons, their ADR went up by 300%. In the weeks immediately after sort of the announcement of some of these lockdowns. So it very much was driven by and destination specific. But it's a combination of things. It's mostly due to supply though, I would say. I mean, in the case of New York City, it's people not wanting to be there. So that's sort of on the demand side. And in the case of the Hamptons, again, it's both demand as well as supply. So people who traditionally maybe wouldn't have even listed a home until maybe June or July. We're starting to list the homes in March because they had people ringing in about properties that were booked up solid, and they were ringing owners trying to get them to rent it out earlier than normal, just to increase that supply. So it very much destination dependent, but supply and demand, as always, is really a driving factor of that.
And then I guess the million-dollar question on that supply is, what happens post-COVID? What are your thoughts on, I guess, the outlook? Does that supply stick around? Is this a permanent inflection that we're seeing where now this private rentals market is now bigger than it was before? Or how do we think about the future?
Yeah, I mean, honestly, I think the total addressable market is just going to continue to get larger. I think the way that we travel is going to be forever changed. It was already changing, particularly with millennials, Gen Z, whereas previously, back in the 50s, you had people who would rarely take a holiday. They valued much more stability and let's purchase a house and let's be settled. Whereas younger generations are very much more focused on experiences and doing things. So travel is a huge part of that. I certainly think, as soon as things normalize a bit more with the situation, the pent-up demand for that travel is only going to increase, and certainly more so with, as the population kind of ages out of that more traditional thinking of what financial stability is and what is a valuable experience to spend your money on, or as opposed to objects. So I certainly see the total addressable market as getting larger. I also see trends in some of these younger travelers as well, being more willing to stay in a short-term rental. That's for a number of reasons. That can usually be because it's cheaper, first of all. And also it gives them the ability to live life a little bit more like a local. It's a completely different experience walking into a hotel in the center of town than it is, getting into a flat in an older part of the city that you may not have visited otherwise, trying to make conversation with local neighbors. And that really is what travelers are after. It's more about that experience and feeling like you've really been there and not just been and seen the sites and checked off a list of, bucket list.
Sarah, it's Richard again here. Just wondering, I guess when Airbnb started, it was very much probably a brand aimed at individual or couple travelers, millennials, renting rooms. How far do you think they are on the transition to being, a broader remit looking for family travel, etc.? Do you think there's further to go in that respect, or do you think they already have that broad appeal?
I certainly think they have that broad appeal. For me personally, I always look for short-term rental. It's actually the opposite. So I would stay in a hotel, for example, if I go with my husband, but if I'm traveling with other members of family or with friends, we look for a larger space where we can all be together. So I think it very much depends on the size of the group. And I think we're seeing sort of the opposite trend. So it's no longer Airbnbs are just for sort of couples or single travelers. It very much is for groups. I have several clients in the hotel industry who have commented to me personally that they've lost some of their larger, even business travel accounts. This is pre-COVID, but we anticipate that to continue once business travel picks up again. They'd lost some of their larger accounts because now, these companies are deciding to send their workers to Airbnbs or to short-term rentals, and they'll put 3 or 4 of them in the same flat. And, it's good for team building. It's easier if you're going away for a conference to collaborate with people. You don't have to meet in the hotel lobby. You have a common area. You really get to know each other and sort of forge that team spirit. So it's both on the personal side of looking for some of these larger properties, 2, 3, 4 bedrooms, as well as for business travel. So I really am quite optimistic about Airbnb's take of that market, and I don't see them slowing down. If anything, I think that people will feel safer being in a short-term rental once travel does pick back up than maybe in a hotel that has lots of common areas.
And maybe just following on from that, I just think about the questions I get asked on my kind of hospitality companies, but do you get a sense of what Airbnb's domestic versus international split is these days? And also, how much they're making from business travel?
Yeah, absolutely. So definitely the majority of the listings on Airbnb, while traditionally it was very US focused, it really is much more international. So they actually now have more listings outside the US than inside the US. And then if you look at business travel, it's a bit difficult to gauge. So previously we were really easily able to capture this. There used to be sort of a distinction with each of the properties called business ready or Airbnb for business travel. And it was very easy to sort of filter out these properties that were really geared towards business travelers. They've since removed that. I think to sort of remove that stigma of I'm going on a business trip as opposed to a holiday. I think Airbnb's whole brand is really trying to be where you stay when you leave your house, when you go out of town, whether that's for personal or business use. And so I think they've definitely come to a point where that line has been so blurred that they've not even really felt the need to continue that distinction in their products of what makes up a business ready listing as opposed to just a normal listing. So I see that trend continuing. And I think the fact that they've removed that distinction speaks volumes about the perception of what an Airbnb really is and what its purpose is.
And then maybe just to sort of round off here, another question we definitely get a lot on Airbnb is around the regulatory risk. The issue in certain countries with licensing having to come in, and higher tax rates if they had some kind of arbitrage over hotels because they're not paying as much tax. Where do you think we are with that debate from your perspective? How much of a risk do you think that is? Do you think Airbnb would ever have to give up any growth to facilitate that regulatory challenge? Yeah,
absolutely. I mean, this has always been sort of the biggest, I guess, negative thing of Airbnb's expansion. I mean, it really is the Wild West. Anybody can pop on and post a listing. As we mentioned earlier, my experience in Cannes, can happen to anyone. That could, that happened to be an individual owner, but, they're mixed in the Airbnb platform with professional owners. And so I think it's definitely, the onus is really on Airbnb to sort of be proactive about that and go after the cities. And if that means coming to an agreement with the cities to be sure that people are properly collecting taxes, or whether that means really telling the right story of saying, hey, in your city, 40% of listings are managed by a host where it's a private room in their home, or a host that's making less than a certain amount a year. This is, really not something that you should consider taxing or regulating. So I think it's really about them getting ahead of that. The areas where we see the greatest success is when Airbnb has worked with local authorities and gotten, not only before the regulations were released, but also when it comes to city planning. Trying to tout the benefits of, hey, if we were to have, more Airbnb properties here, that also means that spending and the local economy is going to benefit. The residents are going to benefit because, for every Airbnb, maybe there's X new restaurants opened. I think it's really on them to kind of go after those facts and get in with the governments beforehand, because if they don't, there certainly is a risk of that stinting their growth. I mean, we've certainly seen this in terms of unfavorable regulations coming into place in places like Barcelona, Amsterdam, and London, where it really had quite a decimating effect on the total number of Airbnb listings active, and made people less willing to publish a property in some of those areas. So it really is on Airbnb, but also on some of the other portals to band together on this and work with regulators to make something, put something in place that makes sense, both in terms of tax collection, as well as in terms of being a little bit more transparent about their profits and, how they're going about collecting any sort of municipal taxes and registrations and things like that.
That's great. Do you think they'll be happy to share the data? We've seen a few announcements recently, like in Munich, I think, was suggesting that they're going to have to collate data so they know kind of how much is out there. Do you think they have any wariness over sharing data with local institutions, or do you think they'll be happy to comply with those requests?
I think they're happy to look like they're complying. This is obviously my personal opinion, but I mean, we work with a lot of government organizations at AirDNA who, previously stopped conversations with us and said, hey, we don't need your information. We're going to get it directly from Airbnb. We signed an agreement with them. Hee ha ha. They come back to us 6 months later and say, this data is not at all what we want. It's very general. So Airbnb, I think sometimes in order to pacify the government, says, sure, we'll give you information. We'll give you macro figures. But what it boils down to is Airbnb saying something like, the typical host in this area earns X per year, with no definition of what makes up a typical host. Or saying there were this many bookable nights this year. So it's very much high level information. There's been very few situations outside of France, really, where they're actually stepping in and collecting the taxes. And I think they're going to need to be a little bit more open and more of an open book in terms of what reservations are coming in, what kind of revenue they're actually receiving. But I don't see them being overtly willing to get into that situation if they can avoid it.
I notice we're at 1:45, so maybe just one very final question I've got emailed. How do you get your data? Are you getting it directly from Airbnb, or is it via a sort of scraping exercise?
Yeah, so it's a combination. So we're scraping the API from both Airbnb and Verbo for the availability data. So that means that we're collecting globally information on all the property characteristics, as well as the calendar availability. So in the calendar for each of these properties, what we see is every day the price in the calendar, and then a status of either available or unavailable. So when we pick up a day in that calendar that's unavailable, we run our machine learning algorithm on that day, which looks at 16 different characteristics of what makes up a booking, and helps us determine, is that unavailable day due to an actual reservation, or is that due to an owner block? So is that for maintenance or owner use or some other reason? Then we subsequently augment that with our data partnerships program. So we're collecting information, scraping on about 10 million listings globally. And we're collecting daily reservation information through our data partners for 750,000 properties. So that data then gets fed into our algorithm, not only to make sure that it's as precise as possible, but also to help us make any necessary changes to the algorithm to account for differences in booking behavior from when the algorithm was originally developed.
I noticed we've got one hand up in the audience, or a virtual hand up. So hopefully it's not been an accident. But Harry, I'm going to open your line. So if you want to ask your question, go ahead. I'll open it now.
Great, thank you. Can you guys hear me?
Yep, we can hear you.
Okay, great. So one question that we have is there's obviously a split between urban and rural markets, where in the urban markets Airbnb seems to dominate in the US, and Verbo has much more supply in rural areas. Can you give us any idea of what the split, we know Airbnb has about 7 million listings versus Verbo's 2.5, but what percentage of that split for each of those is in those rural or destination type locations, just to get a sense of, how much closer the competition is between the two versus sort of looking at a blended scale. Thank you.
Yeah, absolutely. I mean, I don't want to give you a specific figure because I don't have that pulled offhand for what it is currently. But historically, we've been looking at Verbo, for example, being about 60 to 70% of its inventory that is only in what we would consider destination markets, whereas Airbnb has been about 85% city markets historically. Of course, there may have been a bit of a shift there with the pandemic, but this was pre-pandemic at least. So I'd imagine a bit of a change there with the pandemic.
Okay, got it. Thank you.
Thanks for asking that question. Mark, unless there's anything else you wanted to jump in and say, I think we'll wrap it up there. So Sarah, thanks so much for joining us. Mark, any final words from yourself?
No, this has been very informative, I think, for everyone on the call. So thank you for joining us today, Sarah.
Absolutely. Thanks so much, Mark. Thanks, Richard. Appreciate it.
Thank you very much. And thanks everyone for joining. And as ever, if you've got any follow-ups, please don't hesitate to reach out to Mark, myself, or any members of our teams. Thanks very much. Enjoy the rest of your day.
Cheers.